Hello, I'm Hickey from interest.co.nz and welcome to a special investing report brought to you in association with the BNZ. Now, surveyors regularly find that New Zealanders love residential property as their favourite investment. Over the last 10 years or so, those people who invested in property, way back certainly before 2004-05, have made a lot of money on capital gain and haven't paid tax on it. And they've done a lot better than the stock market over the last decade or so. But let's have a look at whether it remains a good investment, and in particular, how overvalued or undervalued it might be. And we've done some figuring. We've looked at the cost of housing in New Zealand, the median cost, and then we've looked at the median rent. And we've got those figures from the Department of Building and Housing. And what we've found is this chart here, which shows that the ratio of house price to median rent has been wobbling around, but essentially has been rising since 2006, and that's the earliest data we've got. From around about 20 times total rent for the year to around about 24 if you're in Auckland, 22 or so in the rest of the country. What this shows that if you purely look at that as a return, the average return on the amount invested in a residential property in New Zealand is around about 4 to 4.5%. That's before you take into account rates and maintenance and other costs. So at that rate, residential property certainly isn't worth it compared to, say, investing in the bank. Of course, you're assuming there no capital gain. And that's the reason so many people are involved in residential property. So when you make a decision about residential property, it's all about capital gain and whether you think that will continue. I'm Hickey. That was a special investing report brought to you in association with the BNZ.